Now, I know what you're thinking. Investing during a crisis? Isn't that risky? Well, my friends, let me assure you that within every crisis lies a hidden treasure trove of possibilities waiting to be seized. Imagine this. While others cower in fear, uncertain of what the future holds, you have the chance to position yourself as a savvy investor, taking advantage of the unparalleled opportunities that arise during a housing market crash. It's like being handed the keys to a vault filled with untapped potential. But here's the catch. This opportunity isn't for the faint of heart. It requires courage, knowledge, and a hunger for financial success. So, if you're ready to embark on a journey where fortunes are made, where dreams are realized, and where exponential growth awaits, then, my friend, this is your moment. Warren Buffett, arguably one of the greatest investors of all time, once said, "Be fearful when others are greedy and be greedy when others are fearful." The clock is ticking, and the choice is yours. Will you join the select few who dare to turn crisis into triumph, or will you let this chance slip through your fingers? To effectively navigate any market, understanding its dynamics is crucial. A housing market crash occurs when property values decline significantly, often resulting in foreclosures and distressed properties flooding the market. Factors such as an economic downturn, subprime mortgage crisis, or an oversupply of housing can trigger a housing market crash. These events can lead to a decline in property values, making it a challenging time for homeowners, sellers, and buyers alike. During a housing market crash, homeowners may experience a decline in their property values, leading to negative equity or foreclosure. Sellers may struggle to find buyers willing to pay their desired price, and buyers may face difficulty in securing financing. However, amidst these challenges, there are opportunities for those who are well prepared. While a housing market crash can be devastating for some, it can also present opportunities for those well prepared and informed. One major advantage of a housing market crash is the potential for lower property prices. This provides an opportunity for buyers to secure properties at a significantly reduced cost. Additionally, buyers may have increased bargaining power, as sellers may be more willing to negotiate due to the limited demand. Distressed properties, auctions, and short sales are common during a housing market crash. These properties are typically sold at a lower price due to the financial difficulties faced by homeowners. Investors can take advantage of these opportunities by conducting thorough research, identifying undervalued properties, and making strategic offers. It's crucial to conduct thorough research and due diligence before making any investment decisions during a housing market crash. This includes analyzing market trends, understanding the local housing market, and assessing the potential risks and returns associated with each investment opportunity. Now that we've covered the basics, let's explore strategies to build wealth during a housing market crash. Diversifying your investment portfolio is crucial during a housing market crash. By spreading your investments across various asset classes, such as stocks, bonds, and real estate, you can mitigate risk and potentially offset any losses in the housing market. This strategy helps protect your overall financial well-being and provides opportunities for growth in other sectors. When it comes to the housing market, diversification means not solely relying on real estate investments. Yes, real estate can be a fantastic asset, but during a market crash, it can also be risky. So, what can you do? Look beyond just the housing market. Consider diversifying your portfolio by investing in other asset classes such as stocks, bonds, mutual funds, or even alternative investments like precious metals or cryptocurrencies. By diversifying, you spread your risk across different investments, so if one sector like real estate takes a hit, your entire portfolio won't crumble. It's like having a safety net to catch you if one investment falters. Plus, diversification opens up opportunities for growth in other sectors that may be performing well, even during a housing market crash. Remember, diversification is all about balance and spreading your investments across different asset classes, industries, and geographical locations. This way, you're not putting all your financial eggs in one housing market basket. So, Seize the opportunity to diversify your investment portfolio during a housing market crash and watch your financial future thrive. Long-term investing is key to success during a housing market crash. Trying to time the market or engage in short-term speculation can be risky and unreliable. Instead, focus on a long-term investment strategy that aligns with your financial goals and risk tolerance. This approach allows you to ride out market fluctuations and potentially benefit from the recovery of the housing market over time. During a housing market crash, it is crucial to seek guidance from experienced professionals, such as real estate agents and financial advisors. These professionals can provide valuable insights, help you navigate the complexities of the market, and ensure you make well-informed decisions. Their expertise can be instrumental in identifying lucrative investment opportunities and avoiding potential pitfalls. Lastly, it is essential to stay informed and adapt to changing market conditions during a housing market crash. Keep track of industry news, economic indicators, and the local market trends. By staying informed, you can make proactive decisions and adjust your investment strategies accordingly. Remember, knowledge is power in the ever-evolving world of real estate. That's all for today's episode. We hope you enjoyed this wild ride. Until next time.